Okay, we're good. Hey, so welcome to the presentation this morning. And this is about profit comes first. At the end of the day, it's your business. And the underlying thing is if you're in business, the goal of your business is to create a profit. And it should come first because if it doesn't come first for you, nobody else is going to pay you first but yourself. So you kind of have to put yourself first. It's like that airline thing, when the air masks drop out of the ceiling, you put it on yourself first before you can help others. And again, I just want to be clear up front. A lot of people think when they hear the word profit in business that it's all about the money, and nothing could be further from the truth. This is not about making millions of dollars and chasing profit. It's about having the fuel to run your business so that you have the ability to pay yourself, pay your employees, make the investments that you want to make, get rid of a lot of the stress and anxiety that occurs when we are entrepreneurs. So before we go into that, I just want to spend a little bit of time telling you about my backstory. I've been married for almost 25 years to my wife, Dolly, and we have two teenage kids. We're actually immigrants to the United States. We both came here at a young age, and our parents that was their second big move for both of them. They were refugees in India, so they had to rebuild their lives within India after World War II. And then they left India to come to the United States in the 60s and 70s to literally chase the American dream. And one of the things that I noticed within our entire community is that the people knew the principles of how to build wealth. So when we came here, my parents were only allowed to bring $25. We landed in the wrong part of town, not so nice living places. And within a very, very short time, they quickly built wealth. And all of the people around us quickly moved up the economic ladder. And I saw that going on because they left India, people spread all over the world. So we have family everywhere. And it was the same principles that occurred. The second thing that I also noticed was, and they talked about it a lot, because our parents were building wealth and they were working hard, a lot of times they would not raise their kids with the same principles that they were raised with. And so now you have a bunch of rich, spoiled kids running around blowing all your wealth. And so it's not only do you know how to build it, but how do you pass on that knowledge to your kids? And my kids are teenagers. They all have Roth IRAs. They're doing well and figuring out for themselves. So it's these constant principles. The reason I say that is many of the principles that we learned and that we taught our kids are literally the same principles that come out of Profit First and the book from Mike Michalowicz. And we'll dig into that. The second thing is I was not always in this great shape that I am. Today, I am in the best shape of my life at 54. For the majority of my life, well into my 40s, I struggled with weight. I did what everyone told me. I went to the gym. I used the machines. I watched my calories. And they told me this was how you build weight, or this is how you lose weight. And what I found is it just didn't work for me. I constantly struggled and I couldn't figure it out. And what I found out is that I wasn't given all the information and I wasn't given the best information. And I joined a group very similar to this one here in 48 days. And as part of that, they just said, "Hey, what do you need help with?" And I just kind of just threw out there, "Hey, I need help with losing weight and getting in shape." And I met some people who shared with me some of the best systems out there. They actually come from Tim Ferriss, and it's the 48-hour body. And I started changing little things, and I had dramatic success. And I was just amazed at how that happened. The reason I'm sharing that now is because those principles are also very similar to what you see in Profit First. And so we'll kind of weave that story in as we go. So let's start at the beginning with Profit First. The first problem that we have is that the formula that you've all been taught for how to build profit is wrong. This formula is designed for accountants to report out on financial statements. This is how the generally accepted accounting principles are done. It's sales minus expenses equals profit. Well, where is profit in that formula? It's at the end. It's the last thing, right? It's a leftover. And when you do that, you end up with the results that we have in the United States. There's 28 million small businesses, and 22 million are barely at break even because of the formula. The formula doesn't work. Just like me, I went to the gym, right? I used the machines, I restricted calories. It was the wrong formula. It didn't work. The other thing that I learned is it's also about human behavior, right? It's really hard to change our behavior. It's really hard to do things differently. And so if we have to change behavior, we're going to struggle. This system does not require you to change behavior. We use the same behaviors you already have, and we leverage your existing behaviors. So from that standpoint, it's easy to do. And again, if you do the same old thing over and over, you're going to end up with the same old results. So let's change things around and let's make teeny changes. This is really a small change that occurs. One of the underlying principles in psychology that works here is Parkinson's Law, which basically states our demand upon a resource tends to expand to match the resource. So if I tell you I need a report, you have a week to do the report, you'll take a week. If I tell you I have a report to do and I need it in 2 hours, you'll figure out how to get it in 2 hours. In your business, you've probably had this, as you have vendors come in, they ask you that question. Well, what's your budget for this project? They're asking you, how much are you willing to spend? And the reality is if you tell somebody, well, I'm willing to spend $10,000 to do this, they'll spend $10,000. If you tell them I need to do this in $1,000, then they'll figure out a way to spend it in $1,000. And that's the underlying principle. We tend to use up whatever we have. And that's the same thing that comes with diet, right? I do a lot of entertaining. And if you go to a restaurant that has a buffet line, what you will notice is if you are given a big plate, you will fill up that big plate full of food. You may or may not eat it all depending on your self-control. Some of us are very good. We'll leave when we're full. Most of us tend to empty our plates. When you look at your bank account, which is what you do, most business owners don't look at their spreadsheets. They don't look at their financial reports. They don't look at any of that. What they do is they look at their bank balance account and they go, do I have money? Is there money in account to pay my bills? Is there money to make this investment? And if there's money, they go ahead and they spend it. And that's fine. So we're going to leverage that behavior. One of the simplest ways that you find to losing weight, and the same thing with this, is the principle of small plates. If you have a smaller plate to look at, you naturally will tend to take less. You will naturally tend to eat less. The same thing happens with your bank accounts. If you go to look at your bank account and there's less money in it, you figure out a way to be able to spend less. And so that's the design of the entire system. You don't have to change your willpower. We just change what you see so that it's easier for you to say, hey, what's a better way to do this? I don't have money. How am I going to figure this out? How am I going to make this work? You're all smart people. You started businesses. You know how to do this. This is kind of a limiting factor underneath that makes it possible. The second thing is, even though we have small plates, we still need to make the right choices in what go on that plate. That right there is not a healthy diet, right? So make sure you're putting the right things into you and making the right kinds of choices. And so we talked about this. Most people who are in business, especially smaller businesses, they go into their bank account. They check in every day. How much money is in my checking account? Can I afford to make payroll? Can I afford to buy this? Can I do these things? We aren't looking at the reports. It's no big deal. I know how to read P&Ls, cash flows, bank balance sheets. I know how to do all of that. I have an MBA. But you know what? It's irrelevant. Even though I know how to do that and all the accountants know how to do that and all the bookkeepers know how to do that, they're not looking at the right pieces of information on there. They're looking at that as a retroactive. In other words, they're looking historically. You made a profit last year. You did something. It's a reporting type of a system. It's not an action type of system. So it's always looking backwards. It's never looking forward. People don't look at these sheets and go, well, what do I need to do necessarily going forward? So again, it comes back to Parkinson's Law. We look in our business account. If there's money, we spend it. If there's less money, we spend it. This is where the key comes. If you take out profit first, right, from your bank balance and you put it somewhere else and you hide it from yourself, this is how I built wealth. Right from my first paycheck, I took money out of my first paycheck and I hid it in an account that I didn't have easy access to. And I just kept increasing the amount that I was hiding from myself. When you do that, when you go to do what you naturally do, which is to look at your checking account, you'll see that there's less money in there. And so that's the principle of how the system works. It doesn't require willpower. So the new formula and the one that works is sales minus profit equals expenses. And so you put profit first, right? It's the first thing you do. Now, you're going to say, hey, my business is really tight. I don't have money. How am I going to do this? We tell people to start small, take a baby step, right? If you've got $100 in revenue, are you going to miss a dollar? My guess is no. If you've got $10,000 in revenue, are you going to miss $100? No, you won't. So if you just start with a teeny amount like 1%, then you've got the ability to do that. Again, you're forcing your way, you're kind of using Parkinson's Law and you're leveraging. In the past, profit was a leftover. Now, when we pull it out front, we learn to do with less. So I'm going to take a second here, just a quick stop. Anyone have any questions or want to drop something into chat? If you want to come off of mute and ask questions, that's fine. I just want to make sure everyone's on board so far.
It makes total sense. We don't do this, but it does make logical sense.
And I will just say this for those of you, even if you don't own a business, if you work somewhere, this is kind of the principle of the 401k, right? You take money out, you separate it before you start spending. It works whether or not you're in business or you're not in business. It's the principle that works, not how you apply it.
Hey, Rocky, I'll just say, this is Greg. I'll just say I endorse Profit First. We install it in all our clients. So preach on, brother.
Will do. Thank you. So again, bank balance accounting is highly effective. It's just that we've already taken out your profit. And actually, we do more than that. We take out your owner's pay and we take out the big one that everybody forgets about, which is taxes, right? When that tax bill comes, we all freak out because we forget about the fact that it's happening every quarter. And if you have a business that's scaling up and you double your revenue this year, your accountant's basing your taxes on last year's revenue. And all of a sudden you double your revenue and your taxes are doubled and they're afraid to call you. Because the last thing a tax accountant wants to do, and I'm an enrolled agent, I get this, is call you up and say you owe a bunch of money at the end of the year. Because it causes the customer to freak out at them and say, you're a bad accountant. You didn't plan for me. I know many people who use Profit First, and when tax time comes, believe it or not, they're jumping for joy. They're excited. And they're not excited because they have to pay taxes. Everyone hates paying taxes. What they're excited about is they know that when they get the call from the accountant, even if it's a six-figure tax bill, they know that the money is set aside in their account and they can stroke a check and they can sleep at night. And that's literally what it's all about. It just takes all the anxiety away and it makes it so much easier. We talked about this with the 401k. Again, you're just hiding from money from yourself. That's how I built wealth. I set up so many little pots of hiding money for myself, and then you just let them compound, and that's what they do. It works. It doesn't matter business or not. It's true. So everything that I'm talking to you, these are ageless principles, okay? These principles, I've talked to people, they've been around for hundreds, if not thousands of years. Mike Michalowicz put it into a book and made it simple for everyone. And the book is called Profit First. It actually started out as a chapter in another book, and it took off so well that he took the chapter and turned it into a book. It's been talked about everywhere, Wall Street Journal, Forbes, Accounting Today. There are hundreds of thousands of businesses that use this system. It doesn't require any change to the way you're doing things. It's all kind of done behind the scenes. And so the relationship I have with Mike is that I'm a member of his Profit First Professionals. He certifies us, makes sure that we know what we're doing. The second thing, which is really cool, is I have access to all the other Profit First Professionals and Mike's group. So if you have kind of a different question, you're in a niche industry or you're outside of the country, I can actually get you the answers to the question. So I had a client the other day, he goes, I'm in Canada. My bank's charging me a fortune for every account. How do I do this? I'm like, give me a moment. Within 24 hours, we had a list of banks because I could reach out to the network and get that. Can you do this yourself? Absolutely. You can go buy the book. It's like $20. Go get it wherever. I don't get any money off of it. You can implement the systems yourself. But what I found when I lost that weight is I needed accountability partners. I needed a dietitian. I needed a trainer. And I kept getting better and better people to surround me as I went through my weight loss because they kept me accountable. They helped me to make sure that I was achieving my goals. As a Profit First Professional, that's what I do. I keep you on track. I remove all the friction. When you have a problem, it's my problem. It's no longer yours, and I help make it simple for you. For this group, if you ever have questions, just email me. I'll answer them, or we can always talk about them on a call. So I'm always happy to just provide value to all of you. So here is how it works. We talked about small plates. Right now, everything comes in and it probably goes into one account and you probably spend out of that one account. We look at that as the serving tray. It's this big tray with all this money in it. What we do though is we try to allocate based on apportionments, and I'll show you exactly what all the allocations are in a moment. You pull out for your profit, you pull out for your pay, right? You're working, you're supposed to get paid, right? Just because you're the owner doesn't mean you come last. We cover your taxes, which we talked about. And of course, we all have operating expenses. And so you need to make sure that you cover all of those things. So we literally create plates or bank accounts for each of these systems. Those of you who know Dave Ramsey and know the envelope system, it's the exact same system as the envelope system. Dave Ramsey didn't create it. It's been around for 100 years. He just made it simple and easy for all of us to follow. We just do it digitally. So we use digital accounts instead of envelopes. You don't want to put all your business money sitting in an envelope on your desk. So let's take a look. How do we allocate all our money? So based on your average revenue range, these are your allocations. Okay. They are targets. Your industry might be different, but this is just a generalized target. The first thing you'll notice, though, is right above real revenue is actually the word real revenue. So real revenue is what is truly your business revenue. So I know one of our participants today is in the Amazon business, right? So in the Amazon business, and I don't know, these are made up numbers. Let's just say that our cost of goods is 80%, which means everything we buy takes up 80% of our total costs. And it's essentially a pass-through, right? We're buying something, we're selling it to the customer. If I was an Amazon seller and I had $1 million in sales, but 80% of that was cost of goods sold, we're going to pull the cost of goods sold off the front and we're going to say our real revenue range for our business is actually $200,000. And all of this would be based on $200,000. Some people are in the construction trade. And if you're in the construction business and you've got subcontractors and you're essentially just billing out for your subcontractors and it's a slight pass through, maybe you're taking a small percentage, you want to pull all of that out so that you have your true real revenue, because that's what we apply the percentages to. Otherwise, it just doesn't work in the system. So that's the first thing you have to figure out. If you do have some of that, but it's extremely low, less than 35%, then you can leave it in the mix. But for those of you who have that type of unique business, that's how we determine real revenue. And then we start with our allocations. So profit. So if you had a $200,000 business, profit would be 5%. Your pay would be about 50%. Your tax is about 15%. And then operating expenses is 30. And as you grow, these percentages change over time. Here's the thing. These are targets. You can't say, this is what my target is tomorrow. I'm going to go open this account, my bank accounts, and do this. What you have to do is figure out where you are currently as a percentage. So you can look at your tax return. You can see how much you got paid. You can see how much you have for profit. You can see your operating expenses, and you can figure out your current expenses and how they match up. So many of you may not take a profit. Some of your owner's pay might be, let's say, at 25%. Well, to go from 25 to 50%, we're not going to do that in a day. We're not going to do it in a quarter. We're not going to do it in a year. Depending on your business and how much change you're willing to make, this might be a 1 to 2 or 3 year process where every quarter you're making tweaks of 2 to 3%, making small changes and constantly improving your business. So it's a continuous improvement process. So again, I'll pause right here just to see if there's any questions on the allocation percentages and how to figure them out.
I have one, Rocky. It looks like 15% tax rate is what you're accounting for no matter what your income, no matter what your total revenue is. Is that correct?
It is. So taxes are only generally against your profit and your net margin.
Okay.
So if you think about it, even though it looks like a low number, you're saying, well, I pay 30% in taxes. You're right, but you're not paying 30% of your revenue. You're paying 30% of your bottom line. And so it's designed on that. Again, in your case, depending on your business, your percentages might be higher or lower. Generally, that's where they find them to be targeted to.
Okay, great. I'm happy to know my accountant is guiding me correctly. That's what, because I do contract work and he told me take out 15%. So I do every payday. I just hide it, like you said, in that system.
There you go. So you're already doing profit first. You're doing the principles. Now it's just adding a couple extra accounts.
Yeah, I didn't even know it. So I'm excited to hear all this. Thank you.
And for those of you who charge sales tax, same thing. Your sales tax should immediately go into a separate account. It's not your money, it's the government's. And the government doesn't need, they show up and they raid your bank accounts and they have a license to steal and they don't play around. So it's the one person you don't want to mess with. So make sure you segregate their money for them. It gets rid of anxieties. So mom was always right? Veggies first. Eat your veggies first, not your dessert. Make sure that you allocate appropriately, you set up your plates, and you put things where they belong. If you do things in the appropriate order, everything else will work out. And it's really not difficult. So I'm going to show you exactly how the system works and how you allocate. So deposits flow in. Right now, you have a general banking account. They come into that account and then you allocate. So we do the percentages. We have the chart. You figure out what percentages work for you, and then you move them into these accounts. So you're going to have a profit account. You're going to have an owner's pay account. You're going to have a tax account and an operating account. So you need to open up 4 more accounts at your bank where you can electronically transfer the money to it. All right. And that's what will happen. And I'll show you exactly when and how you do that. Before we do that, I know a lot of people look at this and go, it looks like it's a little complicated, too many accounts, it's overwhelming. It really isn't. It's actually pretty simple. And if you have automated systems or a bookkeeper, they can handle this very easily. So while it seems a little complicated, it's not. We talked a lot about habits. There's 2 lines here. I'm just going to ask you, you can just put it in the chat. Which line is more positive? Number 1 or number 2? And we're starting to get some answers here. Tom's smart. So Tom said they're the same, right? They're the exact same words. It's just a different order, right? Most people, though, would say that the second line was more positive. We tend to anchor on what we see first, and then we kind of tend to drop off from there. And so it's just flipping the switch. And I say this because when you do business, it's the same thing, right? When you're putting out a proposal, if you start with your first offer at 10,000 and say, but I have a better deal at 5,000, you've anchored people on a higher number to begin with. So all of these things that we're doing are based on certain types of psychological tricks to help us. Why are we doing this? Because we want to remove temptations, right? If you want to go on a diet, you need to remove your temptations. So I'm going to take a step back. Chris asked if we could read them. So the first line is evil, hate, neutral, joy, love. The second line is love, joy, neutral, hate, evil. So the goal here is to remove temptations, right? If you're hungry and there's cookies, you will eat them. You won't eat one, you'll eat the entire jar, right? So the faster we can remove temptations, the better. Most entrepreneurs they chase shiny objects. It's what we do. It's the way we're wired. So rather than changing our wiring, let's hide things from myself. This is how I built wealth. There are two more accounts that occur. These accounts are at a separate bank. They are difficult to access and they are hard to get to. And some people who can't deal with temptation actually have accountability partners that prevent them from pulling money out of these accounts. One is a profit hold, and the second is the tax hold. So the profit hold is to remove profit so that you don't raid your profit account, and the tax hold is so that you don't raid your tax account. These accounts require you to build up money over time, and they're too big a temptation and too easy to raid. So if you can hide those amounts and keep them harder to reach, you're less likely to reach in the cookie jar and take the money. Again, we're creating systems to prevent you from doing what you normally do and to prevent yourself from making the choices you make. So when do we do this? Twice a month. So twice a month, 10th and 25th. Again, your business might be slightly different. You might need to do this every week. You might need to do it on a different basis, but everyone goes, how do we start? Twice a month is perfect. The 10th and the 25th. And basically what you do on the 10th and the 25th is you look at the money that came in, you allocate it, and you move it to all the other accounts. Your bookkeepers, if you have bookkeepers, can do this for you. They can tell you, hey, this is, we had $10,000 in revenue, move 500 to profit, 2,000 to your owner's pay, 1,500 to your tax account, and then the rest goes into your operating account, which is the account that you tend to look at and that you spend from. So again, we're doing things the same, but we're using those psychological tricks to kind of hurt you, to prevent you from getting hurt. The second thing we do is we hide our account in the profit account. So we move it to the profit account and we distribute the profit account once a quarter. And you distribute half your profit. So once a quarter, you look in your profit account and you can take half that money. If you're in debt and you're paying off debt, and that's your goal, I want to pay down my debt, you can use your profit account and take that money, that half, and pay off your debt. That's perfectly acceptable. The taxes for your business, I'll answer. The taxes for your business and owner are paid out of your tax account as needed. Go ahead, Lori, you had a question?
So in the top line there, quarterly distribute half of your profit, and you just referenced debt. Is that personal debt or business debt?
That is up to you, right? So if you want to pay off your business debt, that's fine. If you have personal debt and you want to use some of your profit to tackle your personal debt, that's perfectly fine. You might want to say, let's just say I'm going to make, let's say there's $5,000 in that profit account. You might want to say, you know what? I'm going out with my significant other and my kids. We're going to celebrate this profit. We're going out to an amazing dinner, or maybe we're doing something as a family, and I'm going to allocate 500 to that. And the other 4,500, I'm going to pay off my debt. So you've got to figure out what works for you. How do you do it? But guess what? You now have this big chunk of money that you get to make a wise decision with. So at this point, we are at question and answers. The bottom line is, with this system, you don't have to change your behaviors. You can still do bank balance accounting. There are some small behind the scenes things that you do twice a month to move your money around. Everything these days can be set up electronically, so it's not hard to do this. Um, it's very easy to kind of follow through and do it. So at this point, let's open it up and I'll answer any questions that all of you have that might be specific to you or general in nature.
I have another one. Do you have any recommendation for any major banks that you know of that don't charge you extra fees, like for opening multiple accounts, or that actually allow you to open accounts without like having minimum balances? So I found that that's a struggle. That's why I ended up just kind of taking one ledger, and I'm the saver in my family anyway, and I keep the books, so I just hide it there. But I'm not following the 5-account system though.
So most people, so even though you're doing it on the spreadsheet, you're probably still looking at your bank account. And so you're seeing more than what's really there, which is the problem. Are there banks that do it? Yeah, off the top, they tend to be regional. So if you message me afterwards, I can tell you banks in your region. Usually what I find is that your smaller regional business banks have better practices and your credit unions have better practices. I do actually have a list of banks throughout the country that I can share with you. I don't have it at this moment, but I'm happy to put that into the chat later.
Yeah, there's actually a credit union across the street, so I could just check with them probably as a first. I'm familiar with using credit unions. I don't have one here, but I can look into that. Thank you.
You're welcome. Greg, I know you said you have a lot of your customers who use it. What's been your success with the program?
Well, it's been exactly what you've described. It's given them clear visuals to where their cash flow is immediately versus having to wait on monthly reports and all. I mean, we still go through the monthly reports and all to understand where the business is going long term, but this helps them feel more assured what they're doing day to day. We had one client that had no, well, I shouldn't say no. He's got about a $10 million business, and he had about, excuse me, he's a $5 million business, and he had about $15,000 in profit, was the most he ever had in a year. Last year, by putting this system in place and focusing on it, he had over $350,000 in profit, just because it helped him see where he was blowing money out the back door and didn't even realize it. So I know myself personally, I use this as well. I've already got all my taxes in the bank for 2020. I wouldn't have to take $1 out this year, and I could pay my taxes all year long, each quarter, without an issue, because it put tremendous focus on it for me. And so I got ahead on it, and then my profit account's still growing too. So it's like you said, it's a pure discipline thing. One thing I will say to kind of tag on what Faye said is I had a regional bank. I use Regions. And when I first walked in, they said they wouldn't do this. And so I said, okay, well, I'll just move all my money to somebody that will. And all of a sudden they said, oh, we'll do it. We'll do it for free. So just hold your ground, negotiate.
That's an amazing success story to see that kind of difference. And I mean, it happens to us all, right? We all have lifestyle creep. The more you make, the more you spend. And if you can just hide it from yourself, you don't have to have discipline. It just create the systems that create the discipline and try to, instead of using up all your willpower to do it.
I have a comment and then a question. I think that last slide you showed there of what you do with the profit was probably the most powerful of your presentation, because I think up until now, I sort of understood the concept and have heard the concept mentioned, but like seeing what you could do as a reward for following the concept was super powerful, especially paying off the debt part. So I wanted to say that as a comment. Question, I'm not really doing a business right now, like a side hustle significantly, as you all know. From how would you apply this percentage-wise and any other kind of best practices on a personal finance level when, you basically have a W-2 day job?
So for most of my life, I had a W-2 day job. And so what I did, excuse me, I kept upping my 401k until I hit the max, and did the same thing on my wife's side. So I think you're allowed up to, well, there's a percentage and a dollar limit. So by the time we were in our late 30s or early 40s, we were maxing out our 401k contributions. The second thing I did was I built money outside of taxable accounts. So I had mutual funds with T. Rowe Price. Most of the other companies will do this. Every time the money came into my checking account with my paycheck, they would take out, I think I started at like $25 or $50, and they would take out money and they would buy me mutual funds. About every 6 months or a year, I would just increase the amount that they were taking. And so over time, that got up to be thousands of dollars. The other thing I did is whenever I paid off a debt, so I could go buy a car and I could pay cash for it. I didn't like taking cash out of my bank account. So I would buy the car on installments, like a shorter loan, maybe 3 years. And as soon as I was done paying off the loan, I would immediately take that amount that I was paying for the loan and I'd add it to my savings account. So every month, if I was paying a $500 auto loan payment, when the car was paid off, we switched the $500 to automated savings. And so over time, I just kept tricking myself into saving money. We still spent money. We lived large. We had fun. We never felt like we were in need, but we always lived way below our means. And once you start building money and you allow it to compound, it is amazing what happens with compounding. The problem with compounding that people don't realize is if you skip the first 7 years, you're losing the last compound. So in the beginning, it's like you have no money, right? Your first $1,000 is the hardest. Your first $10,000 is the hardest. But once you hit a milestone, the second time you hit that milestone, it becomes so much quicker. And so by delaying doing this, you're losing the last double on your money. So let's say you're 65 and you saved $1 million. Had you started 7 years earlier, your million would now be 2 million. So by waiting the time, what you lost, not was that beginning part, what you lost was that second $1 million at the end. So just on your own, just start creating savings and just start sucking money into it as much as you can. And do it in baby steps, 1%, 2%. You'll never miss 1%. And if every 6 months you can ratchet it by 1% or 2% a year, in 10 years, you go from a 0% savings rate to a 20% savings rate. I know people who are at 50, 60% savings rates. It's crazy. They do have higher incomes, but they also have very high savings rates, and they still have a very nice life and they enjoy it, but they're building wealth, and that creates a massive foundation.
That's great. Just like Roth IRAs or something, I could set up one for my wife and I as well. That's a great idea.
Absolutely. Other questions?
Hey, Rocky, I have a question for you. Do you have any thoughts? And I'm just kind of playing devil's advocate here, but it seems like a lot of your information was based on I don't want to say assumption, but the optimism that your profits are always going to increase. Like if you're doing the right thing, your profits are increasing over time. So would you mind just sharing some things? You know, we all know life happens. Sometimes our profits go down. Sometimes our spouse loses a job, or for whatever reason, our revenue, you know, takes a deep dive for some reason. How do you deal with that? Because at that point, it's not about discipline. It's almost more about the psychology to keep going. So
Correct. So it's not necessarily, so this system works even if your revenue is flat year to year. Let's say you have a $100,000 a year business, your profit is going to grow year over year, even within your $100,000 business, because you're constantly looking at things and questioning, do I really need this? And do I really need to spend on it? So it's creating the discipline and the focus to cut your expenses. So even if your top line doesn't grow, you can still grow your bottom line. Too often, everyone's like, they're always focused on their top line. And I see a lot of online people. I hit 7 figures on this launch. And like, that's wonderful. How much did you pay in advertising? 7 figures. So did you actually make any money? And that's kind of what we're working on. Yes, life does happen, right? So people lose jobs, people get sick, all of those types of things happen. That profit that we are pulling out for all those early years, if we're putting them and saving and building wealth somewhere else, then you have that foundation to take you through the storms. So that's why once the money comes out of the business, and you really should build, I call it a war chest. You should build a war chest outside of your business that is separate and not tied to it. Because if you look at going forward, technology can wipe out your business, right? You can become irrelevant. Amazon and eBay and Facebook can change their models. So if your model is based on those platforms, overnight you can be out of business. Building your war chest out of your business and creating those profit accounts, not just in 401ks, but also in taxable accounts. People are afraid of taxable accounts. I'm going to pay taxes. No, you're not. You're not really going to pay much in taxes in a taxable account if it's managed properly. What you're doing is building that emergency fund, that war chest, all of those types of things, so that should life hit you with a storm, and I shouldn't say should because it will, we all hit storms, you have the war chest to go, this sucks, I'm not happy, but you know what? I have money, I can write a check, and it's going to hurt me to write this check, but I can do it. But I also do it with intentionality. I don't just write the check. I go, before I write the check, what else can I possibly do? And if this is what I have to do, then this is what I have to do. So it's there to help you build that super strong foundation. That's the problem. I mean, most people they talk about, they live paycheck to paycheck. You know, a lot of business owners live customer to customer. And that's nice, but wouldn't it be better if you had a massive foundation under you? So here's the real benefit. When you've got a strong business with strong profit, you get to pick your customers. You get to go to your customers and go, these 3 customers are annoying me and sucking all my energy and all my time. I'm going to fire them. And you can, because you don't need their revenue. Did that answer your question? Cool.
Rocky, are you talking with a war chest? Is that separate than your personal emergency fund?
It's probably building up your personal emergency fund, but then, you know, when you get to a certain level with an emergency fund, you can start creating investments and doing other things that allow you to build up that it's retirement, it's freedom, however you want to label it. But yes, you're creating more and more money outside the business so that you don't have to worry if the business goes under or life changes. You still have the foundation to either build a new business or retire or whatever your life dreams are.
Okay.
Take a year off to decompress, right? And reset yourself up for the next thing that you're going to do, because we are going to hit waves. It's just life.
I also was going to ask, can you either go back to that slide that Jordan was talking about, or where can we find the recording? I was taking notes. I didn't quite catch the last part of that slide though.
Is it this one?
Yes, I think that's, yeah.
Okay.
And how do we access the recording?
So I think what we'll do is I'll work with Jordan and we'll get it posted in 48 days.
Oh, sorry.
It's okay.
I have a question. Rocky, have you read the e-commerce version of Profit First?
I have not.
Okay.
I'm guessing that what they're doing is that they're pulling out your cost of goods from your real revenue.
They're allocating an account for inventory.
Right. So you can have an inventory account. And if you're in a high, I don't think you do so much advertising, but you have your Amazon fees. So if you need to allocate for something special like that, then you can even allocate towards that, or you might just actually include it in your cost of goods sold. And doing that. So I'd have to look at your specific way that you do things.
Okay.
Basically what you're doing is you're customizing. So right now we talk about 4 accounts, 5 accounts. Your business may require 7 or 8 accounts because you have a unique business that has certain things that you want to save for. And that's perfectly fine. You can customize this to your business. This is the general principles. But if you need a cost of good account, absolutely, you can do that. And I'm guessing that Amazon doesn't pay you and then you pay them. They probably take it right off the top. So in that case, you're just allocating all of that to the total cost of goods. But now you know, because once you know what Amazon's charging you and what your cost of goods are, you can see what that margin is between what that is and what you're actually charging to see if there's enough revenue there to make sense to even do the work. I know we've had a couple guys on who've sold books in the past, and they said, you know, by the time I add up my time, my hours, and all these fees and shipping, it doesn't make sense for me to sell books. And that's part of what this does is if at the end of the day, you look at these accounts and go, there's no money in profit, there's no money in owner's pay, then you have to ask your question, is this a business or is it a hobby? And there's nothing wrong with it being a hobby. It's, do you want to be in that hobby or do you want to have a different one? But just being clear on where the money is.
Yeah, sounds good. Thank you.
Going to the Parkinson's Law kind of principle, which totally, I want to say, I don't know, frustrates me to no end, is so I think the biggest struggle I have around finances on a personal thing is I hate the bookwork and bookkeeping. Do you have any thoughts around just the basic things that we could use, like leverage that law, or any basic tips around just doing that basic budgeting and bookkeeping that needs to be done on a personal level, that I need to spend that time with Martha, my wife, and I, and do that? It's probably the biggest hang up. It's why we've struggled the most with finances. Not that we're really horrible with finances, but it's definitely our biggest roadblock that's preventing us from going to the next level.
So are you using software? How do you keep track of money in and out right now?
Our software of choice is YNAB. You need a budget. We've been using that for about 3.5, 4 years. I will say, because of not enjoying just getting in there and, you know, even just approving transactions and categorizing correctly, we've been kind of fell off the bandwagon probably in the last 9 months maybe or so. You know, we're kind of hit and miss really keeping it on, but, you know, prior to that, we were doing pretty decent.
So you have a couple of choices. Find a software that you enjoy better. Have the discipline to twice a month or once a month or whatever, say, we're going to sit down and we're going to do this, and figure out which one of you enjoys doing it more so that it's less of a stress point to do that. I've always found one person should do the processes and one person should do the evaluation. When you're in the weeds, you can't see the forest. And so kind of splitting up duties a little bit is helpful. And then the third thing is pay yourself first. So if you use 401ks and automated withdrawals, your savings will get done before anything else. I have made so many financial mistakes, it's beyond comprehension. I've done so many dumb things. What has saved me is that my money was getting pulled out before I even saw it. It was getting set aside before I could do stupid. And so as long as you're not overspending every month, Parkinson's Law will keep you in check. You'll look at your checkbook and you go, there's money in the checking account. We can do whatever. And it's like, if you have the automated savings, there's no money in the checking account, you naturally will behave.
That's good. Yeah, I think it's the discipline.
It is. And this system is designed to create the discipline for you without you having to use willpower. And you can use it, as you see, you can do it personally or in business. It works either way.
I was just going to share with Jordan, just to reiterate what you were saying, Rocky, because my husband and I, that's exactly what we do. We have, I am the person that does the numbers, and but we discuss it. We sit down twice a month. So we have the 8th and the 28th, but that's an appointment on our calendars that we sit down together. And he sees things that I don't see, because I'm sitting here, doing numbers, doing math, and transferring funds and all of that kind of stuff. So it is very helpful to have like a family meeting on that twice a month. We have found it very beneficial.
The other thing is to look at the 80-20 rule. So, 20% of your line items probably are 80% of your expenses. For most people, it can be taxes, housing, automobiles, and entertainment. So if you focus on one of those at a time and see how you can cut costs in that category.
I just want to throw out that Quicken, I use Quicken for my personal finances, and it has a budget feature built into the Quicken, like what you would operate as your checking account, as your checkbook. And so as soon as I put an entry in, it's automatically, if it's a if it's a receipt from a grocery store, it's automatically applying that to my grocery budget. And it just makes it real easy. I love that program. Been using it for years. And you're making one entry and you're accomplishing two things, your checkbook as well as your budget.
And I use Quicken and I use Quicken is personal. QuickBooks is business. And I've been using Quicken since I think like 1991, back to the DOS version. So I can show you all of my spending all the way going back, and it's got powerful reports. I don't use a budget, but what we do is every so often we'll sit down and we'll look at, Quicken will say, here's where you spent your money. And I will look and go, am I happy with where my money flowed? And if I'm not, we'll make changes going forward. If I'm happy with where my money flowed, then I'm good.
Well, thank you, Rocky, for doing this for us this morning. It's been a great presentation, and looking forward to sharing this with the wider community. And I think you did a fantastic job on the presentation. So thank you for taking the time to do that for us this morning.
And thanks for having me. It's been a pleasure.
Hey, can I ask one more question, Rocky? I guess we could apply this to nutrition or finance, but can you just tell us, like, what was the one thing that kind of flipped your mindset to get into a healthier lifestyle, or we could apply that to getting financially healthy as well? Like, what's the thing that helped you the most? Because I know you said that the diets and the gym didn't work and that sort of thing.
So I was doing the first things. So just like profit first, right? We have the wrong equation. Everyone talks about calories in, calories out. That's not necessarily true. Each calorie is very different. Sugar is horrible for our bodies, and we're finally figuring that out. The sugar industry paid a lot of money back in the 70s and 80s to push sugar over fat. Fat's bad. Fat makes you fat. The reality is fat does not make you fat. I eat bacon every day. I eat protein every day. What I don't eat is sugar every day. And then in the beginning, everyone freaked out. Your cholesterol is going to be through the roof eating bacon. My cholesterol is lower than it's ever been. My HDL, which is my good cholesterol, is so high, it's off the charts. We were told the wrong information. The same thing. Most people go to the gym, they do cardio. Cardio is not going, cardio will help you lose weight in the short term. It's not going to help you keep weight and keep your body burning in the long run. And while you can use machines, machines don't give you the full workout that your body truly needs. That's very isolated. And so while you might be strong, all your supporting muscles are weak because you're in a linear progression. And so I had to go to the other side of the gym, which was very scary, and learn how to deadlift, squat, and bench. And literally those 3 exercises are definitely the major changing factor. Now, I know a lot of people think you're going to get big and bulky from doing that. You are not. The strongest people I know are not big and bulky. They are toned and thin. You need super, super good genetics and diet and a million things to get big and bulky. And it's a different kind of workout, but it has made me super strong, and it's understanding what really works. And unfortunately, the world is full of people telling you things that aren't necessarily true. And so don't eat cereal for breakfast. I don't even eat breakfast. Yesterday I go on intermittent fasting. So a lot of times I won't eat before noon, and I do heavy workouts, no food. Um, And yesterday I was on a long intermittent fasting, which means I barely ate anything all day. Probably today and tomorrow I'll do the same thing. I barely will eat just to get my body to mess around with the systems.
Yeah, thank you for everything. This has been so great. So informative.
Thanks for having me.